Welcome to day 6 of the Wall Street Crossover Show, brought to you by Tip TV in conjunction with our sponsors, Admiral Markets. It gives me great pleasure, as always, to reintroduce Mr. Darren Sinden, a market commentator for Admiral Markets. Darren, how the devil are you, sir?
Yeah, very good, mate. Thank you.
Week 2.
Yeah.
I guess nobody's sort of booed us off yet, so I assume all going well in the.
Yeah, we think so. Yeah.
Excellent. So if you're watching for the first time, basically we've set up a number of slides to cover the European period and basically highlight what's coming up in the US session. If you've got any ideas or thoughts or comments, please get in touch with us. We won't take it the wrong way.
Certainly.
Always looking to improve the service. If there's something you think that would perhaps give us the edge to give to you guys, we'd like to hear from you. Right, we've got a number of slides to go through. Let's kick off. First one, the data released over the European session, as if by magic. Darren, what's happening in Europe this morning?
Relatively data light today in both the UK and the US. We've had some numbers out. German import prices for both month on month and year on year. So April over March and April 15 over April 14. Net, the month on month figures came in higher, suggesting there's the hint of inflation. The year-on-year numbers are in line. I think they probably cancel each other out, to be honest. Probably of more interest to me was the comment from Deutsche Bank yesterday that its net profits will be down in this quarter by as much as 50%, even though revenues are up 24% over the previous quarter, just literally on the legal costs it's had to set aside for all of the investigations and things that are going on in the world of banking.
And the headline was a lot of bank trading positions going to be.
Yes, they're going to trim the investment bank and try and spin off Postbank. I don't really see where they're going to be making their money from, though. If they keep spinning out divisions and reducing the size of the business, that's for another day, perhaps. In the UK, we had the CBI Industrial Trends Survey. This is one of those independent data points that takes account of a raft of data. We were looking for a read of 4, came in at 1, so still growing, but perhaps growing more slowly.
GDP numbers tomorrow. It looks as if we might be slowing, doesn't it?
Yes, that's perhaps a bit of a heads up on that, but the GDP number obviously will have a greater bearing. The other thing that happened in the last hour, Japan's credit rating downgraded by Fitch. Only a small downgrade, was A+, is now A. Outlook remains stable, but it's another negative nail in the Japanese economy there.
I'm not sure I trust the credit ratings systems to be perhaps as market sensitive as they should be.
No, perhaps not, and that's the debate still drumbling on from the worst days of the credit crunch and the crisis thereafter. But we have to go with what we're given, and that's where Fitch have taken us.
Okay, so let's move on to the FTSE 100 movers and shakers. HSBC covered in the weekend press, the Sunday Times.
Yeah, it was on our leaderboard last week as well. But as you rightly say, the Sunday Times had a big feature. 2 things that caught my eye from that. One, that they might seek to spin off the UK retail division. Somebody even suggested that the Midland Bank name could be resurrected for that, which would be quite interesting. And secondly, that the Hong Kong Monetary Authority would welcome the relocation of HSBC back to Hong Kong. So as I say, up 2.8%. I think everybody's quite positive on these at the moment. I think I'm right in saying that earlier in the month, Morgan Stanley flagged these as being well undervalued compared to the rest of the European banking sector, and they're doing very well to make up some of that ground now. Going the other way, Tesco, again, we talked about these last week, down another 2.5% today. They're still up around, or worse, still up around 16% on the year prior to the open this morning. So a bit of profit taking there, some of that driven by a sceptical weekend press. The Guardian, for instance, had a big feature asking, the new management to prove that Tesco wasn't a dinosaur of the retail world, so we shall see.
I think we all have our views on that. Okay, so in terms of the M&A rumours and movers, BP.
Well, yeah.
That would be good for sentiment in terms of FTSE 100.
It would. It's quite a strange story, this, because the UK government's taken a sort of preemptive stance on something that may not even be happening and said that they would oppose a foreign takeover of BP. BP, of course, has been put in the frame following the Royal Dutch Shell's decision to merge with or take over BG Group, and a likely candidate to buy BP has been suggested in Exxon, the largest oil company, and also the largest US oil company. BP's market cap around $132 billion. Current prices. Exxon much bigger at $364 billion. Interestingly, both BP, who are going to report on on earnings on Tuesday, and ExxonMobil reporting on Thursday. So both have figures this week. Could there be any hint in either of those numbers? BP are up 16% year to date, just for your guide. But for oil generally, it's a massive week. Chevron, Total, Statoil, ConocoPhillips also all reporting this week. So a big week for oil, and certainly if there was any hint of it, it would be massively positive for equity markets.
Understood. So in terms of US data points to keep an eye on today?
Again, a bit light, but we'll make up for that later in the week. Things to perhaps that do stand out for a thin calendar. The April flash PMI for services forecast to come in around 59.5 against the 59.2 read in March. Remember, anything above 50 in these PMI numbers is a positive.
Yep.
Okay, and then later on today, the Dallas Fed Manufacturing Business Index, very much a regional business survey, but obviously Texas is one of the bigger parts of the US economy. Again, forecast of -12, but that sounds negative, but it's up from a forecast of a figure from -17.4 in March. So the slowdown's slowing, if you like. I suppose we can put it like that. And then probably the elephant in the room for today, figures from Apple, which will come after the US close tonight. That's Q1 earnings from them. Looking for earnings per share around $2.14 as against $1.77 this time last year. On revenues, should come in around 55.75 billion. And of course, what other people will be watching for will be any hint or comment about early demand for the watch. So.
And we've had analysts on the show being very sceptical about the next phase of this technology. Interesting, the revenue stream now, it's got the GDP of 10 countries, whatever it is.
Quite incredible, the numbers that they can generate, and they've still probably got quite a lot of room for growth, so one to definitely watch closely.
Okay, Darren Sinden, market commentator for Admiral Markets, thank you for that. We've just got, we've got the pre-market movers and levels.
Yep, okay. So
that's me front running the Monday show.
Trying to. So a couple of things that caught my eye in terms of pre-market movers. Verizon, who most people will be familiar with as providing security certificates for websites, they're down 3.97% after a Q1 earnings miss and lowering, or at least narrowing their guidance for the coming quarters. And then a US farmer called Acorn, down by 14%. They've admitted that they're going to need to restate the whole of their 2014 accounts. It is always very messy. Not too much change in levels to watch today. For the S&P, we're looking at 2110 on the downside, 2120 to the upside. For the Dow, 17,975 is your downside level, and 18,110 the one to look at on the upside. The euro dollar, 107.50 on the downside, 108.90 is your upside target. Aussie dollar pretty much where it was against the dollar last week, so 78.40 and 79.40 are our upside levels there. Dollar yen, 118.50 on the downside, 120.30 to the upside. And lastly, cable, we're looking at 150.75 as a downside level to keep an eye on, and 151.
These levels have remained constant for the last number of days, haven't they? So it feels as if there's stability for now.
For the moment, yeah. I think people are waiting for news flow to sort of incentivise the market to move one way or the other.
Yeah, absolutely. Okay, let's have the real close now. Darren Sinden, market commentator for Admiral Markets. Lovely to see you. We'll see you same time tomorrow at 1 o'clock.
Thank you.
Have a good day. Thank you.